However, if a customer consistently fails to honor their payment obligations, despite repeated reminders and attempts to resolve the matter, you gotta get tougher. This could involve escalating the issue to senior management or engaging the services of a collections agency to pursue legal action if necessary. Chip Schweiger here. Welcome to another edition of the Things Entrepreneurs Should Know, the business podcast for entrepreneurs, founders, and business owners who want to build lasting financial value and supercharge the growth of their business. Few things can supercharge your cash flow than collecting accounts receivable. And that's because cash is literally the lifeblood of your company. So today on the show, we're diving deep into the world of accounts receivable. From understanding its importance to implementing best practices for collecting on current and past due receivables, we'll cover it all. So grab your notebooks and let's get started because this one's packed full of tips. After the episode, check out the show notes at teskpod.com. Hi, and welcome back. Before we dive into the nitty-gritty of accounts receivable management, let's begin with the basics. And that starts with defining exactly what accounts receivable are, and more importantly, why they matter. Accounts receivable, often abbreviated as AR, represent the outstanding payments owed to a company by its customers for goods or services provided on credit. In simpler terms, it's the money that your business expects to receive from clients who've purchased your products or services on credit terms. Now, managing accounts receivable is crucial for any business's financial health. And here's why. Effective management of accounts receivable is vital for maintaining a healthy cash flow. Unpaid invoices tie up your company's capital, making it difficult to cover operational expenses and hinder growth opportunities. Also, prolonged delays in collecting payments can strain relationships with customers and impact credibility. So if you're curious how your business can optimize its accounts receivable processes to ensure timely payments, lean in for a minute. Implementing best practices for collecting accounts receivable can significantly enhance your cash flow and streamline your financial operations. Here's some key strategies to consider. First, you'll need clear payment terms. So establish transparent payment terms upfront, including payment due dates, acceptable payment methods, and any penalties for late payments. Clearly communicate these terms to your clients to avoid misunderstandings. 2, invoice accuracy. So here ensure that your invoices are accurate and detailed, including the description of goods or services provided, quantities, prices, and any applicable taxes or discounts. This is important because mistakes or discrepancies in invoices can lead to delays in payment processing. Third up is prompt invoicing. You'll want to send out invoices promptly after delivering goods or completing services. The sooner you invoice your clients, the sooner you can expect payment. That's just human nature. And here, I suggest you consider automating invoicing processes to expedite the billing cycle. Next is follow-up procedures. So you'll want to implement a systematic approach for following up on overdue payments. Send out friendly reminders before the due date and escalate the communication if payments remain outstanding. And a pro tip, personalized follow-up calls or emails can often expedite the payment process. Now let's talk about one of the slick ones, and that's offering incentives. Consider offering early payment discounts to incentivize clients to settle their invoices promptly. Conversely, you can impose late payment fees on overdue balances to encourage timely payments. Also consider payment options. Provide multiple payment options to accommodate your client's preferences. Said another way, make it easy for your customers to pay. Accepting electronic payments such as credit cards or online transfers can expedite the payment process and improve cash flow. The next tip is to monitor aging reports. Regularly review aging reports to track the status of outstanding invoices and identify overdue accounts. Analyze payment trends to pinpoint any recurring issues or problematic clients that may require special attention. And with that, you'll also want to establish credit policies. Develop clear credit policies outlining the criteria for extending credit to clients, such as credit limits, payment terms, and credit evaluation procedures. Conduct credit checks on new customers to assess their creditworthiness and minimize the risk of bad debt. The next to last tip is to leverage technology by investing in accounting software or accounts receivable management systems to automate repetitive tasks such as invoice generation, payment reminders, and credit monitoring. These tools can streamline your collections process and improve efficiency. And improved efficiencies anywhere in your business means more money in your pocket. And finally, cultivate relationships. Build strong relationships with your customers based on trust and mutual respect. Yes, this is business, but we're all human beings after all. Open the lines of communication and address any issues or concerns promptly to foster goodwill and cooperation in the payment process. There's that phone thing we all have, so think about using it. I think you can see that these strategies are incredibly valuable for businesses looking to optimize their accounts receivable processes. However, if you're faced with persistent late payments or delinquent accounts, you need to take action. Dealing with delinquent accounts requires a proactive approach and careful consideration of the underlying reasons for non-payment. In some cases, late payments may be due to temporary cash flow issues or administrative oversights on the customer's part. It happens to all of us. If that's the case, diplomatic communication and flexible repayment arrangements can often resolve the issue amicably. However, if a customer consistently fails to honor their payment obligations, despite repeated reminders and attempts to resolve the matter, you gotta get tougher. This could involve escalating the issue to senior management or engaging the services of a collections agency to pursue legal action if necessary. It's crucial for businesses to strike a balance between preserving customer relationships and safeguarding the business's financial interests when dealing with delinquent accounts. But don't be afraid to be firm. It's your money after all. It's your money. And a final thought, accounts receivable management is an ongoing process that requires diligence, attention to detail, and adaptability to evolving business conditions. By implementing best practices and leveraging technology, businesses can optimize their collections process, improve cash flow, and ultimately enhance their overall financial performance. Well, that about wraps up another edition of the Things Entrepreneurs Should Know podcast. Be sure to check out our website at teskpod.com, where you can find the show notes, an archive of our past episodes, and other resources to help grow your business. That's teskpod.com. And if you haven't done so already, I'd appreciate if you'd take just 1 minute to give us a review on Apple Podcasts or rate us on Spotify. It helps out a lot to get this to more entrepreneurs and business owners. And if you've done that already, please consider sharing this show with family and friends who you think would get something out of it. As always, thank you for your support. This is Chip Schweiger reminding you that if you always do what you've always done, you'll always get what you've always gotten.